I think the first thing, what you're hinting at, is we had a full-blown bear market last year.
Yeah.
We didn't experience it because Bitcoin, ETH, and XRP did okay because they had institutional flows from ETFs and from corporations. If you look at everything that didn't have that didn't have ETF support, it got hammered. Even like the fifth or sixth largest asset was down 50, 60%. This is full bore 2022, 2018 bear market. We ran the 4-year cycle last year. We're already at the bottom. I think we're coming back up. My view on what's going to happen in the alts market is we're not going to have a classic alt season where every zombie coin raises. I think people are going to be insistent on fundamentals, and they're going to distinguish between high quality projects and low quality projects. I think you have projects like ETH and Solana that have clear traction on stablecoins and tokenization will do well. Zombie coins, I think, will just be overlooked and won't have the same rising tide lifts all boats that we saw in previous alt cycles.
Bitcoin has been stuck in an unusual pattern. While institutional money pours in and regulations ease, the price sits surprisingly quiet. Gold is breaking records as central banks panic about dollar debasement, yet Bitcoin, which shares the same story of self-sovereign value, is not following. Something feels off, and the tension is building. For the past year, structural demand for Bitcoin has exceeded new supply by massive margins. Corporate buyers and ETF inflows are absorbing Bitcoin faster than miners can produce it, yet the market refuses to break out. Sellers are willing to take profits at these levels, particularly around the psychological $100,000 mark, creating a wall that institutional demand has not yet cracked. But walls do not hold forever. Bitwise CIO Matt Hougan believes Bitcoin is about to enter a parabolic move similar to the one gold experienced in 2025. His prediction is rooted in a simple supply and demand reality. Gold's price exploded after central banks maintained elevated buying for years, eventually exhausting existing sellers. Bitcoin is following the same pattern right now, just earlier in the cycle. Structural demand from ETFs and corporate buyers already exceeds new Bitcoin supply, yet existing holders remain willing to sell. Once that selling pressure burns through, Hougan expects Bitcoin to mirror gold's exponential rise. The question is not if Bitcoin will move, but when the last sellers step aside and let the real run begin. Let's hear directly from Matt Hougan for more insights. Please don't forget to like, subscribe, and enable notifications. Thanks for tuning in. Enjoy the rest of the video.
So specific to gold and Bitcoin, because I think it's really instructive, the thing to remember is the really simple fact that prices are set by supply and demand. So what's happening in the gold market is when the US seized Russia's assets after they invaded Ukraine, you saw central bank purchases go from about 400 tons to 1,000 tons per year. That was back in 2022. And when that happened, gold's price went up 2% in 2022. And then central bank purchases stayed the same in 23, 24, 25, and looks like they're continuing in 2026, about a steady 1,000 tons. So up from historical norms, but they went up in 2022 and then stayed flat. The price of gold didn't start really running until 2025, right? It had good years in 22, 23, 24, but it started running in 2025. What does that tell you? That tells you that in any market where there is supply and demand, if there is new demand, it has to work through existing holders, right? Central banks caused purchases of gold to be more than net new supply. But there were people who were willing to sort of shovel coal into that fire in 22 and 23 and 24. They eventually ran out and the price skyrocketed. I think the same thing is happening in Bitcoin. We're just earlier in that process, right? Bitcoin entered this structural demand over net new supply when the ETFs launched in January of 2024. If you look at ETF purchases or corporate purchases or combined, it's vastly more than the amount of new Bitcoin being produced. But there were existing people that were willing to sell, particularly as we got to $100,000, which is this big behavioral sell level. We're still working through that sale wall. But just like gold eventually entered this parabolic move, Bitcoin will follow suit. Gold is telling you that the world is concerned about debasement, that it wants to be able to self-sovereignly hold assets. That same story is true for Bitcoin. We're just earlier in burning through this willingness to sell from existing holders We're going to get through it. Will it be the middle of this year? Will it be next year? I'm not sure, but I think we're going to see the same exponential move we saw in gold. I think gold, as you said, is painting the way, right?
Yeah.
The demographics are good for Bitcoin. The core fundamental thesis is good, but they just don't move at crypto speed, right? I think we're seeing adoption, but it'll still take years for it to really accelerate. When it does, though, it's going to significantly kink that supply-demand dynamic, and I think it will be another catalyst for Bitcoin. Look, I think the first thing which you're hinting at is we had a full-blown bear market last year. Yeah. We didn't experience it because Bitcoin, ETH, and XRP did okay because they had institutional flows from ETFs and from corporations. If you look at everything that didn't have that didn't have ETF support, it got hammered. Even like the fifth or sixth largest asset was down 50, 60%. This is full bore 2022, 2018 bear market. We ran the 4-year cycle last year. We're already at the bottom. I think we're coming back up. My view on what's going to happen in the alts market is we're not going to have a classic alt season where every zombie coin raises. Yeah. I think people are going to be insistent on fundamentals, and they're going to distinguish between high quality projects and low quality projects. I think you have projects like ETH and Solana that have clear traction on stablecoins and tokenization will do well. You have a project with strong fundamentals like Chainlink, Hyperliquid doing really well in the last little period. I think those will do well. Zombie coins, I think, will just be overlooked and won't have the same rising tide lifts all boats that we saw in previous alt cycles. So it's a more differentiated alt cycle, but I don't think it's dead at all. Like, I think high quality projects will do well. I don't think they're overvalued. I just think people will be more distinctive. And I say that as someone who runs an index fund. So I should hope for a rising tide, but I actually think people are going to pick and choose winners in the space. And that we're already through the bear market. I think that's probably the most important piece. I make an analogy to the bond market where you have on-the-run bonds, which are the current liquid market, and off-the-run bonds, which trade at a discount because they're not the focus of the market. I think you have crypto assets that have ETF and futures that have this institutional onboarding, which is the marginal buyer, and then you have everyone else. And if you're everyone else, good luck. I think you have to go like to the far end of the degen spectrum before you find an everything else that will do well. Like, you have to go to privacy coins, which attract just a completely different audience. But everything else needs those futures. They need the ETFs in order to get this institutional market. Because if you're an institution, why are you going to go outside that, right? You're just not. Like, you get fired. And they don't want to get fired. So I think that's a big deal. There are things that the crypto industry wants. There's things that the banking lobby wants. There's things that Republicans want and things that Democrats want. And we're trying to get to a point where the bill is okay enough that no one is angry enough to nuke it. The most recent iteration, there was a lot of hope around January 15th when there was a markup of the bill. But then both the crypto industry and the Democratic side came out and basically said, this is unworkable. If you look at Polymarket, the odds are slightly above 50%. I think we're trending in a positive direction. The administration has delivered on most of its core promises on crypto. So absent a prolonged government shutdown, I'm modestly optimistic about clarity. I do think it's really important, though. The mental model I have for why it's important in the market is what clarity does is it puts a legislative sort of foundation on this pro-crypto regulatory tilt we've had under Atkins versus Gensler, right? Absent having legislation, that pro-crypto regulatory tilt could flip again if we have a change in administration. If you want to go into a nightmare world, imagine Elizabeth Warren as the next chair of the SEC, and you can think of sort of what's at stake. If we have legislation, it's cemented and people can build in this market. I suspect what we'll see from a return perspective is if clarity passes, investors will pull forward a lot of value into assets tied to stablecoins, tokenization, and DeFi, because they'll assume, look, this is the way all finance is going to work for the next 10 years. Wall Street's going to build on this. If clarity doesn't pass, they'll have to wait to see if those get real world traction. Because if they get real world traction, even a change at the SEC 3 years from now won't be able to unpeel it, right? If everyone is using stable coins, It'll be like when everyone was using Uber before it was really legal, right? The regulations will bend to fit. But the shape of the curve will be slower because people will insist on that real world traction before they believe it is here to stay and sort of free of the Warren style risk that we could see in 3 years.
Hougan points to the numbers that prove this shift is happening. When Russia's assets were seized in 2022, central bank gold purchases jumped from 400 tons to 1,000 tons per year. The price barely moved at first because existing holders were willing to sell into that demand. It took years for those sellers to run out, and when they did in 2025, gold entered a parabolic run. Bitcoin's ETFs launched in January 2024, creating the same structural imbalance, and the market is now working through the final wave of sellers. What makes this moment different is the regulatory shift. The Gensler era of strategic ambiguity is over. The new SEC leadership is providing clarity, even without new legislation. Companies can now build with confidence, and that changes everything. Hougan argues that even if the Clarity Act fails to pass, the market will still thrive because the regulatory hostility has ended. Now, the quantum threat that people keep raising is not a fundamental risk. Bitcoin has solved massive problems before, and this one will be no different. What Hougan notices is that quantum concerns only surface when the price is stagnant. It is an excuse, not a real barrier. When the price starts moving again, those fears will fade, just like Tether fears faded in previous cycles. Let's hear more from Matt Hougan.
The fact that we're talking about it and the fact that there are solutions to it means we will solve it. There's, of course, execution risk and things to worry about, but I don't think it's a fundamental threat to Bitcoin. My honest view is that people raise this excuse when they want a reason not to invest.
Yeah.
That honestly, if price were ripping it, we were all-time highs, you wouldn't have institutions worrying about quantum. We've seen these sort of FUD raises through the 8 years of Bitcoin. People used to worry about Tether. They weren't really worried about Tether. They were just looking for a reason not to invest. And I think that's the same with quantum. Ultimately, we're going to solve this problem. I think, Bitcoin has solved big problems before. It will solve this. I think as price starts to accrete, those quantum fears will sort of fade into the background again. I totally think that's right. I mean, just to put a sort of Machiavellian view, Larry Fink's most profitable ETF is a Bitcoin ETF. Do you think that any administration is going to completely undo that? There's no way. There's just no realistic way. And that's true across Wall Street. They see the profits being made in stablecoins. NYSE is building on tokenization. We're not going to go all the way back. I just think it's more a matter of if the curve is like this or the curve is more like this. I think clarity will determine that to some degree. But I do think we're in a bullish trend either way. 2010, that ETF assets will surpass mutual fund assets by the end of the decade. And they didn't. They're just now getting there. Existing asset management doesn't go away. It just sort of slowly loses its dominance as a new generation evolves. But if someone's in their 20s, what do I think they'll be investing in their 40s? I think it will be vaults. Right? I don't think they'll be putting money into traditional ETFs. I think they'll be using vaults and tokenized assets for 100% of their exposure because it's just a much more efficient vehicle, but it will take a while, right? These things, crypto thinks it'll happen tomorrow. That's not what we saw in ETFs. And I don't think that's what we'll see in vaults, but you'll start to see them take the increasing share of net new assets over time. And I think the drip is solving very unique problems. The drip is not like my father using tokenized assets. It's solving very unique crypto native problems or nights and weekends problems and perfecting the mechanism there. But it absolutely reaches an inflection point where it does go parabolic. I completely agree with that. I mean, the first place that's going to play out is something like thematic exposure to stablecoins and tokenization. If you want exposure to those things and you just buy crypto assets, I'm not sure you're getting it right? If you don't own Circle, if you don't have exposure to PayPal, if you don't have exposure to private Tether, you may be missing where the value accrues. So I think within crypto, you're going to see this blend of crypto assets and crypto equities. But then more broadly, look, like the Mag 7 isn't the Mag 7. It should at least be the Mag 8 with Bitcoin in there. And you could argue with ETH in there. The Q's on technology exposure without ETH and Solana. I think investors have this artificial divide between crypto assets and equities. You're just talking about exposure to the growth and how the value accrues can be different. But there's no real reason why the Qs can't be replaced with the Qs plus the leading crypto assets, or the Mag 7 can't be the Mag 10 with Bitcoin, ETH, and Sol.
Love it.
And I think you're going to see that in the next couple of years for sure. The stat we love to throw around is 15,000 meetings a year with institutional investors, which is incredible. The thing about those meetings is they're just strictly bullish. So on the institutional side, it is literally just a matter of time. Assets are already flowing. You can see that in ETFs, and they will flow at an accelerated rate going forward. I haven't had an institutional meeting that wasn't extraordinarily positive in well more than a year. So they are not experiencing this negative FOMO or this negative sentiment that we see in retail crypto.
Yeah.
The other side is that retail crypto is really depressed, right? I mean, it's worth noting Bitcoin was down, 5% last year, and the fear and greed index was at all-time lows. It was max depression. And part of that was that the altcoin market was in a full-blown bear market. So this was more like 2022 or 2018. It'll come back, right? The sentiment in crypto retail was not great in 2022. And it was zero in early 2019. If you remember that time period where Bitcoin had been down and then fell further from 5,000 to 3,000. People threw up their hands. They rage quit on Twitter. The same things we're seeing right now. It will come back with prices. The driver of prices, though, will be this institutional money coming into the space. I'll leave with one more statistic from my 15,000 meetings. Our average client allocates after 8 meetings with us, which is brutal for my business, but a fun fact, because as you know, financial advisors and institutions don't meet monthly. If you're lucky, they meet quarterly. And so for people who weren't ready to buy the Bitcoin ETF when it launched and just started meeting with us, they're just now getting around to launching. That's why the wirehouses are approving Bitcoin ETFs now, because we're at like that 8th meeting, right? They are now at the point where they're willing to allocate. So I'm very optimistic on the institutional side. I think retail will catch up. I think it's just a matter of time.
Sounds good, man. Any final thoughts before we call it?
No, I think this is a unique opportunity. There are very rare moments in crypto where the fundamentals are ahead of price. I think we're happen to be in one of those moments right now. You can see that in Bitcoin chasing gold. You can see that in stablecoins and real world assets at all-time highs. While ETH, Solana, Chainlink, and others are not near all-time highs. You can see that in the spike of ETH transactions. As a long-term investor, fundamentals are ahead of price. It's a beautiful thing. That doesn't guarantee we're going up, but I'm pretty excited about what the next couple of years brings.
The altcoin market tells a critical part of this story. Hougan reveals that 2024 was a full bear market for everything outside Bitcoin, Ethereum, and XRP. Tokens without ETF support or corporate backing got hammered, with many dropping 50 to 60%. This was a complete cycle compression, where the market ran through what normally takes years in just 1 year. The bottom is already in, and recovery is beginning, but this time will be different. Hougan does not expect a classic altcoin season where every zombie coin rises. The market will now distinguish between high-quality projects with real fundamentals and everything else. Projects like Ethereum and Solana, with clear traction on stablecoins and tokenization, will do well. Projects with strong fundamentals, such as Chainlink and Hyperliquid, will thrive. But coins without real use cases will be left behind. The rising tide that lifted everything in previous cycles is gone. Quality will matter this time. The lack of futures markets has created a structural gap that is now being filled. Without futures, institutions cannot hedge or trade on a basis, which locks them out. Tokens with futures can access generic ETF listing standards and attract institutional capital. If your token does not have futures and ETFs, you are in the discount pile. The institutional momentum is real and accelerating. Every single institutional meeting has been bullish. Financial advisors are no longer rejecting Bitcoin. They are working through their internal approval processes. The average client allocates after 8 meetings, and most clients who started meeting when the ETFs launched are only now reaching that decision point. This is why wirehouses are approving Bitcoin ETFs. It is not because sentiment suddenly changed, but because institutions move slowly and the process is finally coming to an end. Meanwhile, retail sentiment is depressed, and that is exactly the setup that precedes major moves. The altcoin market went through a full bear cycle in 2024, while Bitcoin stayed relatively flat. Fear and greed indices hit all-time lows, even though Bitcoin was only down 5% for the year. Fundamentals are ahead of price, and that is rare in crypto. Stablecoin usage is at an all-time high. Ethereum transactions are spiking. Institutional infrastructure is being built at a record pace. The foundation has never been stronger, yet prices have not reflected it. Do you agree that this is the moment before Bitcoin finally breaks free? Please leave your thoughts in the comments below. Thanks for watching. Don't forget to like and subscribe.